G'day, folks. We're on the defining path to a true economic collapse that the government should be intervening on today, and no one is discussing it as we are so hyper fixated on the macro with inflation and interest rates that I am expecting a correction in the near term in the market, but the long term you need to be so prepared for, because if you are not, you are going to get left behind, as we will review my portfolio to make sure that I at least am on the right path of history, or at least the right side of history, because you cannot be left behind in the new world that is coming. If this is the conversation you'd appreciate, hit that like button, because damn, I'm being super hyperbolic, and obviously this is an entertainment channel. It's not damn financial advice. So remember, I am a clown like the many on YouTube, which right now these clowns are going on about the inflation rate. There is a ton of fear that is about to build into the market after this 6-month, perpetual all-time high run that we've been experiencing across many different equities and assets. And I think you're going to very quickly see us go from greed to fear, as right now into the weekend we saw a little bit of sell-off in some of our favorite stocks. Crypto is pretty much correcting into the weekend here. We're seeing some pretty big drops in a lot of the more lower half market cap, weighted cryptocurrencies. Anything that's affected by interest rates already continues to correct. Things like Apple, things like Tesla. We're seeing a lot of YouTubers point out some statistics that still are quite concerning from the consumer endpoint when it comes to credit card loans, which are basically spiking to highs they haven't seen on a delinquency rating since 2014. However, when it comes to single family mortgages, the mortgage market hasn't been collapsing, but we haven't seen the full bacon of renewals. We're kind of playing this chicken game where, a lot of people have 3, 5 year, maybe even 10-year fixed loans. I don't think you get into a 10-year, but still, when those things come up for renewal, it's going to be neat to see how the entire real estate market holds on. But when it comes to commercial real estate, even, we're starting to see the effects a little bit more. I mean, we can see that we've pretty much doubled in delinquency ratings. I mean, we're not anywhere near as crazy as the 2008 level, but again, everything is kind of trending toward the upside, which can be quite concerning, especially when you look at consumer loans kind of as a whole here. These have skyrocketed pretty high to levels that we really haven't seen since basically 2014, 2013 era. Again, we do not want to see these trends continue because they're going to lead to an inevitable shock in the overall market, right? When you take a look at delinquency rates on all loans, so real estate, commercial, all that stuff, we are ticking up, but again, as a whole, it does not look that substantial yet. And I'm only taking this as anecdotal news because this can change at any point in time. And it's not something that actually concerns me. What does concern me, however, is the jobs market. You really need to pay attention to the jobs market because we're slowly spiking up in the US. I think we're 3.9% now, which is pretty high. I mean, typically it's around 3.8. The last time we were 3.9 was 2018. I don't want to see this trend continue, and it's something that over the long run is going to continue, whether inflation or interest rates get under control. And I'm going to explain to you why in the broad picture of what will cause a true economic collapse. Taking a look, though, I mean, inflation right now, if you take a look at the long view in the US here, we are obviously sticky. A lot of this is self-inflicted. We're seeing oil prices go back up, and a lot of this has to do with the continual lagging factor of how the interest rate costs affect the entire real estate market, from a mortgage standpoint, from a tenant standpoint. When you're renting, landlords want to raise those rents. We need to get back to 2%. The longer this lags out into the year, the worse it's going to be, and I'm very worried that we're going to start seeing the Fed again get us more bearish in the market and start causing a correction in equities. Again, it's something that I've been hearing about from a lot of YouTubers. I'm not playing that. I'm still cost averaging. The S&P 500 just pulled back slightly by about a percentage point here, but I wouldn't be surprised if we start seeing a further breath after this wicked run. You look at the TSX here. TSX has also been on a great run. You take a look at the year to date, up 4.68%. It's been probably one of the best rallies we've seen at the beginning of the year in a long time. And again, it's a mixed bag across the market with these stocks that are rallying and being sold off. Some of the speculative stuff's dropping. Tesla got hit really hard. Google's kind of coming back. Meta's taking a bit of a breath here. It's just been a mixed bag across the board, especially on the Canadian side of the border as well. The good thing is it's been more mixed to the upside, right? Because if you've owned some of these Canadian individual stocks like Bell and TELUS, you're getting wrecked this week from the telecom giants. But if you've owned something like VDY, to your mother effing die, like I told you, the best dividend ETF to collect that juicy passive income, you're probably doing pretty good this week because oil's been coming back with a vengeance. It's definitely been helping the TSX as a whole. Now, when it comes to my portfolio, I desperately want to be on the right side of history and prepping myself for an early retirement because I don't think I'm going to have 10 years. And I'm going to explain to you what I mean by that, because I think we are on the cusp of a true economic collapse. And again, it's not the economic collapse that we're being fed in the macro today. But firstly, we can see in my TFSA, and I'll just show you my retirement accounts. I'm not going to be doing a whole portfolio overview in the corporate and all that stuff, just where I'm kind of buying and my thoughts moving forward. As yes, many of you know, I've been buying Tesla. It has been tanking miserably, and I'm very thankful it is. And I want to see more negativity because I've only got a starter position. I told you, I'm just getting my feet wet here with accumulation plans over the next 3 to 6 months. Google's finally coming back. I'm flat on this position, but it really goes to show that if you just bought the S&P when I bought all these in tandem, you'd be doing much better. But as mentioned, in tandem with my fiance's portfolio, like I really want to make sure we're nicely balanced together. I'm buying the tech stock she doesn't have, and it's nice because these other tech stocks I think are trading at much more favorable values today. Google just, I just think it deserves to be much higher when it has a cleaner balance sheet. It is continuing to grow in comparison to Apple. So I mean, I'm just doing what I can here to keep our tech stocks alive instead of buying the QQQ ETF, and I'm going to keep buying VOO. Hopefully it all tanks in this coming couple of weeks as the fear continues to mount, but I am looking to reaccumulate some of my dividend stocks because yes, I mean, there's a lot of stability coming out of SCHD. A lot of the dividend side of the market right now, and I think VDY I need to get back in my portfolio. I've been waiting to re-add back some of these Canadian stocks. I've just seen more value in Google and Tesla in the midterm here. But again, I'm always kind of spreading my money out and always just making sure I'm buying a nice diverse amount of assets to continue to grow the cash flow, but also make sure that I'm on the right side of history for the economic collapse that we are about to face. Now, what do I mean by this? Well, like I said, I'm going to be doing a full breakdown tomorrow on my live stream. We'll do the portfolio overview along with the economic turmoil that's going to be caused by robotics. I mean, Figure AI, a company I've talked about aggressively on this channel, has been really advancing the robotics, kind of in line with Tesla. This is probably the next closest competitor. But I've told you on every level of society, I mean, even farming, like there's machines coming out right now that are going to take thousands of jobs away from different farmers. I mean, when we can start making machinery to the cost of what it would cost you to go to some third world country and hire somebody, we are in a very terrifying place on the economic level that is going to put even the likes of capitalism in jeopardy. This is something we are on the cusp of in the next decade. I mean, you look at all this crazy AI and machine farming equipment that is literally picking apples off a tree. Like, you know how many jobs this stuff is replacing and how efficient it is and less destructive it is to the environment than humans, the machines that currently exist. Like, that's the scary thing, is it's efficient, it's margin expanding, and a few companies are going to have mass control over the vast majority of this, which is why it's so prevalent to get investing today and fast. Get your debts paid off, get your crap together, because when the next decade hits, so many jobs are about to get completely wiped off the planet that you need to understand that interest rates and inflation are the least of your frigging concern when it comes to the unemployment in Canada, the United States, and globally as a whole. Capitalism, as we know it today, is at risk. You think I'm joking, but you just wait, especially if you're 19 or 20. I've had a decade under my belt to get my shit together, but if you were new to the capitalistic society, you just getting your feet wet, going to university, get ready to get slapped upside the head in a way you've never experienced before, because you're about to get machine learned away. Hell, even in this industry of YouTube, there are people right now that are using these large language models because there's tools out there to get them to learn me, my voice, the way I talk and how I act, and I can implement it. And there are YouTubers that are quietly doing it now, and people aren't even recognizing them, that they are machine AI generated, so they don't have to really do as much work. Personality work's not going to matter in the future. The entire industry and world is about to be uprooted in a way that no one is discussing. The government is not intervening, and it scares the living crap out of me. And as Elon Musk alluded to, the only way you can cope with it from an anxiety standpoint and an existential crisis standpoint is, would you rather be alive to see the AI apocalypse, or would you rather not be alive? And the only way you can really cope with it is I'd rather be alive, because, like I said, if you can see what's coming, we're on a path of something not only extraordinary and fascinating, but horrifying all at the same time. And I'd love to pass that question off to you. Consider subscribing for my live stream tomorrow, where we're going to expand on these discussions.